Rebecca, thank you very much for joining me again. We've spent a couple of hours together filming sessions about what MTD is, or I should say what making tax digital is, more accurately, and the implication for practitioners. We got a lot of questions from AccountingWEB members that we couldn't tackle all of them, and a lot of them just had to do with the mechanics of quarterly updates and quarterly regimes. So very quickly, could you just give us an idea what's expected of the small businesses in what what they're likely to have to file in what timescales?
Yeah, let's start with the exemptions, John. So the original exemption announced some time ago now, I think probably in the budget in March 16, was that people who had a secondary source of income of less than £10,000 would not have to do digital record keeping or quarterly updating. That was extended when the consultation documents came out on August the 15th to say that even if your self-employment or your rental income was your main source of income, you would have a £10,000 exemption. Now, let's just drill into that a bit more because we've had quite a few detailed questions on it. It is £10,000 in total. So if you've got 2 or 3 rental properties, you are pretty likely to be over that £10,000 gross rents. It's not profit, it's turnover or gross rents. Also, if you've got a part-time self-employed business and a buy-to-let, you add the turnover from your business to the gross rents. If that's over 10,000, you're in. Now, that's the proposal from HMRC. It is a consultation question. Is it enough? And I think lots of people have got views on that. So it's one thing, if you do one thing, tell HMRC whether you think that's enough or whether you think, as John was saying, maybe it should be the VAT threshold. Is that an exemption or is that a deferral? What do you think might work? So that's the £10,000. The principle in the consultation documents is then that another band of businesses will get longer to comply. And what might be the threshold for that? Is that a good idea? My own personal view is if we lifted the exemption threshold significantly, then those businesses left within MTD would probably be able to come through in year 1. But we talked quite a lot about that. So that's got the exemptions. I hope that's clear to everyone. Then let's talk about the cycle of what's going to happen. So MTD comes in from the 6th of April 2018. And your first period of quarterly updating is the first 3 months of your accounting period starting after that date, or if I'm precise, on or after that date. If you're a 31st of March year end, your first AP that starts on or after that date is actually the 1st of April 2019. So you will actually then have almost another year until you come in anyway. And from then, what we'll have is, at a minimum, 3-month intervals, more often if you like. Updating HMRC, you'll have a month to update them, which for VAT registered businesses is 7 days less than they now get to do their VAT threshold. But I don't have a big problem with that 7 days. Other people might, so say so if you think so. So you will then file, so what did I say, at March year end. So 1st of April to 30th of June 19 will be your quarter 1. You'll have to file that by the end of July. And then 30th September 19, 31st December 19, 31st of March 20. So those businesses will effectively have another year anyway, just because of their year end. Do I think people will change year ends to delay MTD? They might. I'm quite a big supporter of having a year end for my clients, which means something to them. And so maybe it is what it is.
Although one of our questioners was very concerned where they've sort of encouraged a lot of clients to have the same year ends.
Yeah.
She was a bit frightened about the transition.
Yeah, because it means that you're going to have 2 reasonably quiet months, and then anarchy to get them all in, and then 2 reasonably quiet months. But I think that's part of the forward planning now, is thinking about and maybe talking to clients about, you are on a March year end. Is it actually right that maybe we should swap? What's a good time for your business? 30th of June maybe, So, I mean, just as a for instance, like I was doing the books for a football club, and their year end was the 30th of September, 1 month into the season. And I said, why on earth have you got that? I don't know, that's what our previous bloke said. So we changed them back to the 30th of June, so now they have a set of accounts for a season.
They can compare themselves
absolutely.
against the Premier League.
But that's the approach, I think.
And I think it's worth reminding people as well, HMRC is suggesting to allow much more flexibility about the basis periods. So you could make your financial reporting periods the quarter if you so want.
Absolutely. And in fact, I quite like their example. I'm not sure anybody would do it, but the example they gave, which is really illuminating, is somebody who is a music teacher and wants to prepare figures for each half term. So they have half terms that run, so there's 6 a year, plus maybe the summer holidays as a separate AP. And then you'll simply tax all of the periods that end in a fiscal year. You'd be reporting much more often, but maybe that will suit people. Do look, people who are watching, at the accounting period simplification, because there might be something in there that might suit your clients and might suit you. But it's still going to be tough.
Well, thank you very much for mopping up those little bits and pieces.
Right,
I think
John.
it's a really good condensed package just to get your head around what practices and businesses will need to do. So on behalf of all our members, thank you very much again.
Thanks, John.